Canadian Kyle here at the Wealth Risk Podcast, and today I'm joined with Alan Pangbourne. He is the CEO and president of Chesapeake Gold Corp, ticker symbol CKG on the TSXV, and CHPGF on the OTCQX. They have a large Mexican deposit, but it has some complexities, so I'm excited for Alan to come on to tell his story today. So Alan, thanks for joining me today.
Thanks, Kyle. Great to be here and really good to meet you.
You too, likewise. And as our first time guest, I always ask the question, what were you doing from the age of 20 to 26?
Well, I wasn't doing what you're doing. I was, 20, I was still at university. I was completing my undergraduate and postgrad degrees in metallurgy and mineral processing at the WA School of Mines in Kalgoorlie in Western Australia. So in the heart of the equivalent of the Timmins district in WA. Fortunately, at that time, the gold price was $300 an ounce, and there was one gold mine operating in town. That was it. And all the excitement and attention was focused to the south in Kambalda and nickel, which continues to be a big focus today. So that's what I was doing when I was around 20. I graduated when I was 21, was working my first job, started work as an operator and then became the junior met in a relatively small operation, flotation but complicated. Learned tons. I learned more in the first year I was out than probably the 4 years I was studying. so you know, and a great group of guys that took me under their wing and explained stuff, which you know later on was just so important. And actually, one of the group metallurgists of the company became a mentor for me for probably the next 10 years or so of my career or more. And he always had time, always took the time to explain stuff and really appreciated it. I learned a lot of simple things that sit with you later. And I mentor a couple of engineers at the moment, and you know, some of the things I've said to them are the same as he told me 30 plus years ago. So by the time I was 26, I'd actually done junior met, research met, plant met, and I was plant manager of a 50,000 ounce a year gold producer. And we built one of the first and largest agglomerated gold oxide heap leachers in Australia. So at the ripe old age of 25, I was the plant manager, and then we were also building a 1 million ton per annum expansion plant to go with the heap leach.
Well, yeah, you definitely weren't doing what I was doing, a lot more accomplished. But why don't you go ahead and continue on with your career highlights, because you went to school for metallurgy and you were a metallurgist by profession until today, right? So why don't you talk about career highlights and very quickly, and then get into Metates and how you got involved in that project?
I'd say I'm broader than deeper. So I've had lots of different roles, different seats at the table. So what do I mean by that? I started in operations, as I just mentioned, stayed in operations for about 6 years, got to the level of plant manager. Then I went for the guy who was the mentor. I went and worked for him, but in an engineering company. And that was also a pretty humbling experience when I realized that when you've only got a blank sheet of paper, how do you design one of these plants? Because you've got very little information. So I did that for a while, ran an engineering company, ended up going to South America and building the business there and building it up from nothing to quite a successful business, lump sum turnkey construction contracts over about a 4 or 5 year period. Then I went to the other extreme again, and I joined the biggest mining company in the world, which was BHP. And so while I was there, I was fortunate enough to build a couple of significant projects at the time for BHP. One of them was, probably isn't now, but it was at the time, the largest sulfide heap leach in the copper business in the world. And that was the Spence project in northern Chile. And that's important because if you connect the dots, building one of the first agglomerated heap leaches in oxides back in the 80s, building the largest sulfide heap leach in the copper industry in 2004. And you keep winding the clock forward and you go, Alan, you're doing it again. And I'm going, yes, I'm doing it again. And those sorts of things all push towards, I've always been interested in technologies or looking at the jigsaw puzzle and how can I put it together a different way, and taking pieces from disparate parts of the industry, which unfortunately a lot of the industry doesn't do. Yeah, that we've done it like this. We've always done it like this. It works like this. We're not changing it. Full stop. Yeah. I'm not scared of change. Yeah, when it comes to that, if I can work out how that jigsaw puzzle can be put together in a better way to give me a better economic result, which is what a lot of the people in the mining industry forget. At the end of the day, we're supposed to make money for our shareholders, not just spend it.
Mm-hmm. Yeah.
Right.
Yeah.
So anyway, I spent 15 years with BHP, ended up running as the president and COO of Nickel Americas for them, based in Colombia. And then also I did a short period of time on Olympic Dam, trying to work out how to fix what was at the time the largest potential mining project in the world, the ODX project. That was a little complicated. Couldn't work out how to fix that one. And it wasn't something I wanted to do. So I moved on to something else. Went back to Chile, worked for Kinross for a couple of years in a projects role. Then I went back to operations after many, many years and joined SSR. Initially, the plan was to fix what was a struggling asset in Argentina and then build a project in Mexico. The silver price didn't cooperate, and so we never built the project in Mexico. We did fix Argentina, thankfully, and we bought Marigold. We turned that around. I was the VP Ops COO. We bought CB in Northern Canada, turned that around, and basically took SSR from a single asset struggling company losing money in Argentina to 3 assets across 3 different countries. We went from 100,000 ounce equivalent to over 400,000. And we turned it into a real mining company that was actually making money. Mm-hmm. And then a couple of years ago, as you probably know, they merged with Alesa, whose principal asset is in Turkey. And really the Alesa team took over. And so now after that, I did a short stint with Guyana Goldfields. Mm-hmm. It was in deep, deep trouble. And we couldn't turn that around fast enough, but we did end up selling it. We actually got it into a bidding war, which was just the perfect outcome, and ended up selling it for about 300% over what we originally started at. The first bids were at 60 cents and we sold at $1.85. So that was a great outcome for shareholders and the employees as well, because the new owner is doing exactly what we wanted to do. We just didn't have the money to do it. And so they all kept their jobs, and the mine is still going and moving forward, which is great. And then I took over Chesapeake. So the Chesapeake story. So technologies, heap leach, doing things differently. So I've always been interested in it. I've always watched half a dozen different technologies and what are people trying to do, and where is the industry, depending on which piece, heading. Yeah. Mm-hmm. And a wise man told me once, or I read it somewhere, I can't remember, if you can find a lower energy input to get the same output, do it, because it will always be economically more attractive than the alternatives. Because at the end of the day, if you want to take everything down to its basics, you've got the old mine it or grow it. But if you actually want to get down to real basic, it's energy. How much energy does it take to do the work, whatever that definition of work is, that you need to do? If you can do the same work as somebody else for less energy, you're going to win. It's
Hmm.
that simple. It's that simple. Yeah,
Right.
because energy has a fixed cost. You can make energy cheaper over time with different technologies, but at the end of the day, if your car uses less energy to get you from A to B, it will be a better operating outcome than the more expensive one.
But there's complexities behind that, right? So why don't you talk about refractory
Yeah.
gold deposit and what kind of issues does that bring? Because
So refractory is a lazy word for starters. So refractories covers a multiple of sins. What it really means is gold that we don't seem to be able to get out easily,
Mhm.
right? Oxides is easy. You CIL it or you heap leach it. But there are actually at least 4 subsets within the refractory bucket. So there are sulfide refractories, which is what we believe Metates is. There are preg-robbing carbonaceous shale containing refractories, which is a different type. And they are more complicated because even if you can dissolve the gold, the carbon, as the name suggests, steals it and locks it back up in the carbon, so you can't get it. There are silica locked. They're quite easy to identify, but they're high energy to solve. You usually there's a very clear relationship between crush grind size and recoveries. That's the easiest way to identify those ones. But they require more energy to grind them finer to get better recoveries. So you come back to the energy comment I made earlier. And then the fourth one is tellurides. So generally sulfides and tellurides, you have to destroy the crystal lattice that the gold is in, sulfide or telluride, to be able to get at the gold. By destroy, that usually means oxidize or rust. Yeah. So change it chemically or physically. And you do that multiple ways, but the predominant ones are roasters, smelters, maybe biox. And then what we're looking at doing where we heap leach it in a sulfide, in a heap leach, oxidize it in a heap leach. And why do we, so that's the bit about refractories, the difference between them. Our process probably won't work with carbonaceous shale because it robs or it robs. Doesn't matter whether I do it in a tank or whether I do it in a heap leach. The only way you can usually solve a carbonaceous shale issue is with a thermal, literally burn it away, right? And so roasters generally are what people use. Places like Syama, Jarrett Canyon, some of the others. There's 1 or 2 more in Nevada as well. But that's the issue with carbonaceous shale.
So with Mother Nature, it's not always like one single type, is there? Like what happens if you have a combination of these two? Is there going to be an issue with that if there's a combination of these different types? Is that a
So you'll
problem that you might
yes.
experience?
I don't think so. I mean, we're in the middle of a test work program, and that's obviously one of the things you look for. There's some people will refer to simple refractory and double refractory. So simple refractory is one of the 4. Double refractory is, as you can imagine, it's oh crap, I've got 2 of the 4 in
Yeah.
the same place, right? And some of the Carlin trend in particular is probably the most renowned for double refractory. In their case, it's usually sulfide plus carbonaceous shale. So it's those 2 together. And that's where you get this double refractory type comment come from. We did some preliminary tests way back before we did the deal with Chesapeake to check that if we could oxidize sulfides, can I still recover the gold? Because I don't care if I can oxidize it. If I can't get the gold, it's a bit pointless,
Yeah.
right? So we did some lab scale fast rapid tests to check, and they'd appeared to work. And so we don't believe there's a carbonaceous preg robbing issue, at least some of the samples that we tested. Yeah. And then we've got an ongoing program that's running at the moment to cover a lot of the material. Yeah.
Why don't you go ahead and educate us on heap leach test for the people that aren't in the industry like myself? Like, what's the work involved, and how do you do these tests?
Sure. Should I give you a bit of a history about the Metates project first?
Please, please.
Okay. So Metates, very large deposit, 20 million ounces of gold, 560 million ounces of silver in Durango. It's been known about for quite a long time. It was originally discovered back by Cambior in the day. Been held by Chesapeake for at least 10, 15 years, maybe longer. They came up with a very high capital, but it will work. The question is, how do you fund a $3.5 billion capital build when you're a $300 million company? The short answer is you can't. So that's what it was. We was Alderley Gold. We have this concept and a license to technology that allows us to heap leach sulfides and then come and get the gold and silver. That is 90% less capital, as it showed in the PEA, uses 90% less water, uses 90% less energy, hence the comment from earlier about energy.
Yeah.
And there's no tailings dam, which, given the resistance for local communities about tailings dams, has got to be a good thing. All of that makes it easier to permit. So we've got a very different approach. Want to start small, then grow, rather than just come in big as Ben-Hur and get it wrong. So that's the overall plan, is to start at 15,000 tons a day instead of 90 or 180 or whatever. And that means that the capital cost is way, way cheaper and use a lot less energy to get a similar result out of the other end. So that's what we're planning to do with it. And the PEA showed that, based on the assumptions we put in there, particularly around the Metates work, which will lead me into your question, we have an economic project that should be fundable by a company the size we are, and then be able to expand at phase 2, 3, whatever. Because the first project's 15,000 tons a day, only on the intrusive 31-year mine life. Right, so that's expandable, even if it's just to halve the mine life.
Right.
Yeah. So that's what we're looking at doing now. Test work. So the biggest underlying issue when we bought into the project was metallurgy and economic metallurgy. It's always been known that the ore at Metates was complicated. It's always been known that it was refractory. We believe the PEA shows that, based on our assumptions, there is an economic solution there. So what you got to do is obviously support those assumptions. Now, all of the other assumptions in the PEA, the ore body, the resource envelope, mining costs, all those sorts of things don't change. So what changes is, what's the metallurgical recovery going to be on the heap leach versus a more conventional process? What's the economics of that going to be when you don't recover 95, you only recover 75 or 70 or something, right? And does that all hang together? The PEA says yes. So now you need the test work for this new process to support those assumptions. So the first thing we did when we took over, apart from keep reading a whole bunch of stuff, was need some new holes, fresh material. So I've got material that I can bring to a lab we're running here in Vancouver to be able to do a huge series of tests. Probably by the time we finished, somewhere in the range of 150 to 200 column tests. And so we drilled those 5 holes. Nice surprise, 20% higher grade than we expected. We got some more money from the board, went and drilled another 16 or 17 holes, similar result. That's all nice. That was serendipitous. It wasn't why I drilled the holes. Put that to one side. metallurgical test work. So the first thing we need to do is establish a relationship between size, oxidation, and then gold-silver recovery. So maybe before I go there, just to try and explain why this will work, there's two fundamental concepts behind it. The first one is sulfides, when you expose them to air and water, don't want to be sulfides. They naturally oxidize and form what you'll hear all the industry talk about, which is acid rock drainage, right? So make sulfides wet, sit them in the air for a while, give them a bit of sun and make them warm, helps too. And the next thing you know, you've got this red, yellow water coming out of the bottom of the piles that's pH 2. It's a natural process. It's a pain in the bum. The industry spends billions of dollars trying to stop it. We don't want to stop it. We want to do the exact opposite. We want to accelerate it. Yeah, so that's the first concept. The second concept is that size is inversely proportional to time. The smaller I make the rock, the faster it will react chemically. The bigger the rock, the slower it is. If you take it to your two extremes that you see today, if I leave it in the ground and wait for several million years and come back, I might have an oxide ore body on top of the sulfide ore body. It might have also got washed down the river. So there's a bit of a risk in that process. The other end of the spectrum is what everybody else does today. They crush it, they grind it, they float a concentrate, or they whole ore autoclave it, roast it, or smelt it. Very energy intensive, hence the 90% difference in energy consumptions. But it's quick. Yeah, you can go from go to woe, ton into the start of the milling circuit to gold out of the other end in an autoclave project in less than a week by the time it's done. Yeah, so your cash flow is very fast. About 30 years ago, I saw the start of the copper sulfide heap leach in a little place called Pudahuel, just outside of Santiago. And I got to meet a guy called Esteban Domic, who's a very well-known metallurgist in South America, in Chile in particular. And I watched how they were doing this, and I thought, that's really cool. Yeah. Little did I know in 91 or 2, whenever it was I saw it, that by 2002, I would actually end up building, so 10 years later, the largest sulfide heap leach in the copper industry in the world, which was the Spence project. So I've seen how the same concept applied in the copper business went from literally not much more than a lab experiment to start with over a 10-year period into 200,000+ tons a year of copper production. Today, there's probably close to 3 million tons being produced around the world using those two underlying fundamental concepts. Sulfides don't want to be sulfides. Size is inversely proportional to time. If I can do it by just crushing it, I consume 90% less energy than the alternative. It's got to be a winner, right? So I was watching other technologies, found one that looks like it should work in the gold industry. Got a license for it, did a deal with Chesapeake. We're now doing all the test work, yeah? So that test work, we've currently got 16 columns running. We're building another 16, so we'll take it up to 32. What you basically do is, and in the presentation, there's a picture of 4 columns next to each other. They're actually the same column that were taken over time. And you can see how it went from gray to brown. The gray rock was when it was fresh. The brown rock is after, I think those photos go from May to August or something. And it shows how it's changing the pyrite to sulfide, to oxides, yeah, to iron oxide. That's the first step. So in the test work, we build all these columns and we do them under different chemical conditions, different times, different sizes, to be able to see what moves the oxidation rate which way.
Mm-hmm.
And we're looking for obviously an optimum point where we consume the least amount of energy but still get a reasonable recovery in a reasonable time. So once we've oxidized it, we pick it up, put it down again in another column, and leach it for gold and silver, the same way as every other oxide ore body in the world is leached with cyanide and lime. Gold, silver comes out the bottom, recover it in the Merrill-Crowe plant, exactly the same as everything else in the world. So the only thing that's different is this oxidation step, and that's what we're focused on doing all that test work for. It is slow, right? So to give you an idea of slow, we're running the columns just on the oxidation phase anywhere up to 180 days.
Wow. Yeah.
Right? So 180 days just to make it to go gray to brown. Then I've got to leach the gold and silver, which typically in the gold industry is another 90 days. So 270 days. So what you've actually done is you've exchanged energy and time for working capital. Right, so I'll have to operate the mine for 9+ months, putting money in before I get a penny come out the bottom of the other heap.
Yeah.
Right, and then but that's just so to give you an idea, a 15,000 ton a day operation probably costs you about $10 million a month. A month to run. So 180 days is 6 months, $60 million of working capital on top of your capital costs.
So you say it should work, but it's been unproven at scale, right? Excuse me, sorry.
In the gold industry, in the gold industry.
So,
but last time I looked, the gold industry and the copper industry and a bunch of other industries don't really notice any difference between the pyrite in each one. And at the end of the day, in the gold industry, we're oxidizing pyrite. In the copper industry, whether we want it or not, the pyrite oxidizes. In ARD, anywhere in the world, the pyrite oxidizes. So the pyrite doesn't care what the impurities are with it. The fact is the pyrite doesn't want to be pyrite. Right? So when you say it hasn't been proved at scale, it has been proved at scale in the mining industry, the bigger mining industry. It has been proved at scale in any sulfide mine that has an acid rock drainage issue. And it's a pain in the bum, and we spend billions trying to stop it. So we know what to do to stop it. So do the opposite to not stop it. Right? And then it's how long is that piece of time to get the oxidation level to give you the gold and silver recovers you want. So yes, it's never been proved in the gold industry, but the gold industry is a subset of a subset. Right?
Yeah.
That's I mean, it's a bit tongue in cheek. It's almost the same as saying, well, we drug test drugs on rats first, then something a bit bigger, then maybe something a bit bigger, and then finally we test it on guinea pigs that have got 2 arms and 2 legs and walk around and call themselves human, right?
So would you say your stock price, the market cap of your company is justifiable since it's been unproven in the gold industry specifically?
No, I would say our stock price at the moment, we're trading at what I believe is the worst case scenario, that it doesn't work, because we're trading as $1 an ounce in the ground play. So if you want to buy 20 million ounces of gold and 500 million ounces of silver, we are one of 2 or 3 large undeveloped gold in the ground deposits around the world, and they trade at $5 an ounce. Where do we trade? About $5 an ounce. Yeah. So you know, I don't think that the issue at the moment is some people recognize it, but there's not a lot of them. Most bigger shareholders buy ounces in the ground. Yeah, and that's Peter Palmetto and Eric Sprott, and they are number 1 and number 3 shareholder. I'm number 2 shareholder. So I believe,
yeah,
I'm not sure about the other two, but they're buying an option play, an out of the money option play on the metal price, and that's fine. You can do that. Once we get, I believe, the test work out, that will start to change. Until I can put some curves in front of you and say, look, see, we did this. When we get to 30% oxidation, we get this gold silver recovery. When we get to 60%, we get that. When we get to wherever, we get that. I need 75, so I need to oxidize that much. Yeah, and I can do a proper economic trade-off. And that's what the entire test work program, the first phase of it, is focused on. Get the information to support the assumptions that are in the PEA, so as I can convert it all to a PFS and explain to everybody, here you go. Yeah. Will everybody accept it day one? Oh, it's the beginning of the massive change. No, they didn't when we started oxide heap leach in gold. They didn't when we started SXEW in copper. They didn't when we started sulfide leach in copper. Yeah, it takes time for others to get over that, but nobody else done it hurdle. But once you do, this will, look, mark my words, before I'm dead, this will change the industry.
And will Chesapeake benefit from this financially if you are the one that brings it to the industry? Is this your technology prior? Or?
We certainly plan to. Obviously, we plan to benefit from it with Metates. We plan to use our IP and know-how to look for and acquire other assets that sit in that same bucket, because they're trading, in my opinion, the market's trading them as dollar per ounce in the ground. I think they're worth more than that. If I can release the value that you saw in the PEA, we trade at, I think we're about $200 million today.
Mm-hmm.
The PEA said 1.4 billion Canadian. That's 7 times what we trade at.
Right.
So yeah, I think Chesapeake will benefit from it. Whether we acquire other assets, whether we license the technology to the other assets, which way we do, we are and will continue to look for options to add to the collection of stuff that we want to do. I want to build a mid-tier gold mining company on the back of this technology. That's what I want to do. That's what I'm gonna do.
Right. Saying that you're trading at $1 an ounce, Alan, in the ground.
We're trading at we're trading at about 4 or 5.
4 or 5.
Yeah.
So I'm just wondering, is it economical at the current gold price, $1,800 gold?
Yeah, if you look at the PEA, from memory, our all-in sustainable costs were $700 an ounce. Yeah. So yeah. Oh yeah. No, look, this technology will do to the sulfide part of the gold industry exactly the same thing as it did to the copper industry, the SXEW plants, and their ability to not just treat oxides, but treat the sulfides underneath them as well. It'll do the same as heap leaching did to the gold industry back in the 80s. Yeah, it suddenly opened the doors to all of those small, lower grade open pit operations that you saw spring up all across Nevada, Idaho, Montana, California, all through Australia, Western Australia, Victoria, New South Wales, and elsewhere. I mean, it just completely changed the industry, and that's why I own 11% of this company.
Mm-hmm.
I'm all in. I'm all in. This is not, I'm not playing around. This isn't, I'll take somebody else's money. No, this is my shot at it, and I've been trying to find one of these for decades that I could get hold of, and I got one.
Yeah, it's interesting. You're gonna be, it's an I told you so, right? So
very, very much so.
Well, I hope you can say I told you so to all the doubters out there. We are running short on time here. There is a hard deadline here, Alan. So
Yep.
thank you for your time. I do have a recurrent segment though. It's called The
Mm-hmm.
Vault. And
Mm-hmm.
I want to make sure I always ask the guests these questions because they're more mentorship like questions and it's my favorite part of the interview. So the first question is, what did your parents teach you at a young age that has stuck with you to today?
Find something you love to do, and you'll never work a day in your life. And I know it sounds an old adage, but um, I came into this industry almost by accident. My grandmother actually got me interested in rocks when I was probably 8, and fossils, and it's been a passion my entire life. I the mining chamber in WA, they still run it. They ran a 1-week course where they take take people interested in the mining industry to Kalgoorlie, show them the school, show them the industry. I came back, got off the train in Perth, looked at my mum and said, I'm going to Cal, I'm going to be a metallurgist. End of discussion. So yeah, find what you love to do.
No, that's great. Thank you.
Yeah.
And we are the Wealth Holders podcast. So can you name a high net worth individual? And if you don't want to disclose his or her name, that's perfectly fine. But what did he or she teach you either in business or in life?
So I watch a lot of high net worths, and I think, a mistake people make is try to emulate them or copy them when you're not a high net worth, right? And your risk profile is totally different when you're a high net worth to when, you're like you and I and you're earning salary, right? And your risk profile is totally different. But the one thing I do take away from them, I guess, is a couple of things. Conviction, take risks, and persistence. If all of those high net worths, whether it's Warren Buffett, whether it's Eric Sprott, whether it's Rick Rule, with any of them, they'll all tell you the same thing. Believe what you're doing, be persistent, but you've got to take risks. Now, they're always measured risks.
Mm-hmm.
You don't see any of the three I just mentioned put 100% of their own equity into one stock or one business. They never do it. Even Elon Musk, right? He's raised billions and billions of dollars, but he's put it across 4, 5 different businesses now.
Right.
Right? SpaceX, Tesla, Starlink, that tunnel thing.
Boring company. Yeah.
Yeah, right. He's so they still practice diversity, but they take risks.
That's great.
Yeah.
Yeah, no, that's great.
And that's what I feel I'm doing. Yeah. Am I taking a risk? You bet I am. But it's not 100% of my equity.
Right.
Right. I do have some other savings.
Yeah.
Right. But if it comes off, I'll be joining that club.
Yeah. Well, I'm rooting for you. I just have one more question for you, Alan. I'm just a young man starting my journey in life. Any advice for the younger listeners out there?
Think very hard when you're offered an opportunity before you say no. Because I'll tell you something, and it applies a lot more to girls. And I have a young daughter who's an engineer, and so she's in a male-dominated business.
Mm-hmm.
The younger people doubt their abilities. But if I walk through the door and say, Kyle, I want you to come and do this job, I'm asking you because I know you can do it. I believe you can do it. Don't doubt yourself. If somebody else is prepared to offer you a role,
Mm-hmm.
think very, very hard before you say no. Because I tell you, I have very rarely said no. I've lived in 7 different countries. I've worked in over 14. I've been all over the place. People have paid me to visit places that tourists pay tens of thousands of dollars to go and see.
Mm-hmm.
Yeah. And
Yeah.
you can't beat it. So think very hard before you say no.
I like that answer. Thank you so much, Alan. I appreciate your time. I do like letting my guests close off, though. So here is a chance if we didn't cover something to say to my listeners, but thank you.
No, not really, Kyle. Just thank you for your time. Thanks for listening. I hope your listeners take something away from some of the things I've said today. If it's to become a Chesapeake shot holder, terrific. If not, think about the advice of an old man who may actually know a few things.
For sure. Thank you so much.
Talk to you later. Thanks, Kyle.